Welcome back to the StockTA podcast. I'm your host, Kevin Steuer. Today, we're diving into a major jurisdictional breakthrough. We're talking about Paramount Gold Nevada, ticker PZG. Please note this interview is being disseminated on behalf of the company. In an industry where permitting can take decades, Paramount just achieved a massive milestone, the first ever federal record of decision for a modern gold mine in the state of Oregon. With Grassy Mountain Project now officially shovel ready and a feasibility update just around the corner, the market is starting to look at PZG as more than just an explorer. It's a developer on the cusp of production. To walk us through the Oregon advantage, I'm joined by CEO Rachel Goldman. Rachel, it's been a historic moment for the company. Thanks for being here.
Thank you so much for having us. It really has been quite a year.
So Rachel's going to share her slide deck and take us through some of the most recent developments with the company.
Terrific. Bear with me. Well, thanks again for having us here. As you mentioned, it's been a really pretty dramatic change for us over the last year or so. And I wanted to pause here on this slide just to kind of orient us on who and what we are. So as you mentioned, Paramount Gold, we're trading on the New York Stock Exchange under PZG. This is actually the second inception, in a sense, of a prior Paramount. It was called Paramount Gold and Silver, and that was sold to Core Mining back in 2015. And at that time, they spun out Paramount Gold Nevada, which we were named because we had the sleeper project in Nevada. But the following year, we acquired the Grassy Mountain Project in Eastern Oregon. And why? Because at that time, when we were spun out and looking to acquire Grassy, the gold price was probably $1,200. So Sleeper is a large property in Nevada. It was a past producer, but it wouldn't have been economic at those prices. So that's where Grassy came on the scene. And so since 2016, Grassy Mountain has really been the focus of the company's attention and capital. And really what we're doing here is this is the first project to ever move through Oregon's permitting regime. And I'm going to talk a little bit more about that a little later. But to understand why we undertook permitting the first project in Oregon versus waiting it out for a large project in Nevada, it's simply because we have very high grades at the property at Grassy Mountain. And so the economics, even at that time in a lower gold price environment, were really impressive. So between those two, our main assets, we also have another earlier stage exploration asset called Bald Peak in Nevada as well. But between the main two, we have about in excess of 50,000 acres of total land position. We haven't been doing a lot of exploration over the last 10 years, but that's something that we will be looking at doing more of moving forward. And between those two assets in Oregon and Nevada, we do have a total of 4 million ounces already in resources for us to address, and that accrues 1 million ounces to Oregon and 3 million ounces to Nevada. So just to orient us further on Oregon, this is the access road to our Grassy Mountain project in Eastern Oregon. What I like to show here is it's really a very similar kind of desert terrain as you would see further to the south in Nevada. The access road here crosses BLM land. So the bulk of the project area is actually on Federal Bureau of Land Management land. And then the deposit itself sits on a patented land claim that we control. So although we're geographically close to some population centers, which is important in terms of sourcing labor, we're actually remote enough, as you can see from the aerial, that we're not really going to be bothering any nearby farms, homes, or ranchers or anything of that nature. And the other thing that's really important to note about Eastern Oregon, which we're going to talk about a little bit more too, is that this is a very undeveloped part of the state. So it's really quite poor. So the recent milestones that Kevin was referring to was just this year in January, we received the first ever record of decision, positive record of decision, and final environmental impact statement from the federal BLM. So that essentially wraps up the bulk of our federal permitting. There are certain requirements that we still have to meet along the way, but they're also wrapped into our state permitting. And so the Grassy Mountain Project, as being the first to ever move through the permitting regime in Oregon, we are helping, in a sense, to create new pathways really for how that permitting works. Because it's one thing when you have things written down on paper, it's another when you go through these steps and you uncover different issues that either need to be thought about differently or sequenced in a different order. But so that has also led to a lot of collaboration working with the state agencies and the federal agencies through the BLM, but the state are the ones that are really the first time going through this, whereas the federal, they do have experience in other jurisdictions as well that they can lean into. But at the state side, we had a very significant milestone as well, which was at the end of December, earlier in December, we received the draft permits from the state. So that too is the culmination of 8 years of permitting work that we've been doing with them, and finally issuing these draft permits, which are now going through the review process that followed a public comment and review period and a public hearing that wrapped up earlier in February. So what we're going to see here moving forward on the permitting front is we do expect the state to wrap up their process later this year, probably in the late second quarter or into the third quarter. We don't really have exact visibility on that because, again, there are no precedents for us to look at. But what you're also going to be seeing from us is an updated feasibility study on Grassy. So that should be coming out in the second quarter of this year, and we'll touch on that a little bit further too. So part of the reason why there's such strong support to see the Grassy project move forward is that the county that we're in, Malheur County, is actually the poorest county in the state of Oregon. It's got a 20% poverty rate. It's got a median income that's close to half of the state average. We're going to be a significant contributor to job creation in the county and beyond, frankly, close to 200 jobs in total. So when you talk about direct and indirect, there are the mine level jobs themselves. So that's about 112 jobs, and they'll be good paying jobs, certainly. But then there's also the jobs that come from, the concentric circles, if you will, of job creation that comes from, companies that support the mine directly, and then third-party type support as well. You think restaurants, gas stations, even government offices and the like. And so all in, the study that was generated on behalf of the state by Stantec pegged at about $140 million in annual economic activity that will be coming into this county, which is really a game changer. So this is a good block model of the Grassy Mountain deposit. What I like to point out here is the reason why previous owners of this deposit viewed it as an ideal open pit is because it is an ideal open pit. This purple kind of mineralization here is about 50 meters from surface. That's the low grade. And then the mine that we're building is really anything that's greater than 3 grams currently, and that's embedded in this hot pink here. That's a small underground mine that we'll be building, and that's really only about 150 meters from surface as well. So, I'm not a technical person, but for those who are on the call, you can certainly see that this would have made a wonderful open pit. However, as Grassy Mountain was the first project to be moving through the permitting regime in Oregon, our understanding, not just of the permitting rules, but kind of a read of the socio kind of cultural environment was such that we didn't think that a big open pit would be as palatable for the agencies to permit as our first mine versus a small footprint underground mine. And that's exactly what we'll be building here. And I would venture to say that our assessment there was correct. So on this slide here, these were the project economics. Very important to note, this is from a study that we released in 2022. So these are post-tax, but they were also assuming a $1,750 gold price. And so this is precisely why we're in the process now of updating this feasibility study that I do expect will be available publicly in the second quarter. But so even at a $1,750 gold price, a very respectable level of return for this project, which will be producing about 50,000 ounces gold equivalent annually for an initial 8-year mine life. And the reason I stress initial is that, recall, we have a total of 1 million ounces at Grassy, but this mine plan is really only targeting roughly 40% of those. And so there's still a lot of other ounces there that could work their way into a future mine plan. The update that we're going to be providing in the second quarter is not going to be addressing any change in mine plan at this juncture. We'll be looking at pricing and costing because those are things that are obviously need to be updated for this current environment. So although we had done our initial study in 2020, with an update in 22, there's actually been quite a bit of inflation in some surprising areas over the last few years. So it'll be good to get a refresh of that out to the market. So as much as Oregon is a very unfamiliar permitting jurisdiction, on the opposite end of the spectrum, we have Nevada, which is obviously one of the best ranked jurisdictions globally for mining companies. And what we have in Nevada right now is a sleeper property. So this was a historic past producer. It produced close to 2 million ounces at a 7 gram per ton head grade through open pit heap leach and milling scenarios. So probably, amongst the cheapest mining methods out there, and produced for about 10 years. Why did it shut down? Well, the gold price came off a lot, but at the same time, they had mined out that one high grade vein, and in conjunction with a lower gold price and a lack of, developed higher grade targets, they just walked away. So Paramount was able to pick up this property essentially when it was already shut down. But what we got with it at the time is a huge land position. So we have about 40,000 acres here, which are largely contiguous. If I can direct you to look at that little yellow spot here within the red outline, that's the old pit that produced close to 2 million ounces. And so most of the ground that we have here is contiguous, as you can see, with a bit of a checkerboard below. And so what we have here also is 3 million ounces already and 30 million ounces of silver. Now, these are lower grade, materially lower than the 7 grams that were being mined here historically. But it's certainly a good starting place, especially as there's, we believe, a substantial amount of resource here which is amenable to heap leaching, which again is something that we could be looking at down the road, and we're doing some internal studies on right now to assess if there's a different way to tackle the Sleeper project. And so the other aspect of Sleeper, which we're blessed with, is an enormous amount of data. And so there's a lot of historic drilling that, not surprisingly, was centered around that old pit as they were chasing that 7 gram per ton material. But it also means the rest of our map sheet is somewhat of a white map in terms of exploration drilling. But we have a lot of data from blast holes, from drilling that had been done years ago on the waste dumps, for example. There's in excess of 4,000 historic drill holes as well. And there was production data from a number of years too. So this is a property that's rich in opportunity and is something that we're really looking to try and define better as we go through this year. So I mentioned previously that this predecessor company to Paramount had transacted to Core a number of years ago. So a number of our board and management team were around from that first go around and to this one as well. We also lean very heavily on very experienced and seasoned consultants for all aspects of our business, on the technical side in particular. And then I do like to point out that I do have some very strong support locally in Oregon as well, as we navigate through that regime. On our board of directors, you'll also see strong support here from the Seabridge camp. Seabridge has been a big shareholder of ours. Rudy Franck, the chairman and CEO of Seabridge, is obviously the chairman of Paramount as well. And I guess what I would also, since we're going to be talking about the stock in a little bit, I do like to point out that we have really endeavored to keep the share count low. So on a fully diluted basis, we still don't even have 100 million shares outstanding. We have seen a nice move in the stock. I think with the permitting news that came out over the last number of months has really woken the market up to the idea that, perhaps Oregon will be open for mining business after all. And so, it's quite rewarding to see both the market cap of the company, the liquidity in the stock improve as well. But I would say, all things considered, we're still pretty cheap here, trading at, enterprise value to resource of well below what I think we're seeing for peers right now. And also important to note from my perspective is that we have a strong cash balance right now, which will allow us to deliver on all of our upcoming plans and catalysts that we see we'll be able to deliver. So I guess just in summary, we are all US based, we are a US listed company, and we are US domiciled. We do see a lot of exploration potential both at Grassy and at Sleeper down the road. Grassy being an advanced permitting is, making history, paving the way for the future, but also I think paving the way for some tremendous value creation for our shareholders. So I guess with that, I would leave you with our contact info, and I'd love to hear your thoughts, Kevin.
No, thank you so much for presenting. And I think it's definitely an interesting story. And I'd like to, I'm going to pull up my screen right now and share your stock price so we can talk through kind of what that looks like right now. So interesting setup. You guys coiled for a while. And then this is when you guys had the permitting news and it went, really high, really quick. And then it kind of, along with the rest of the market, has sold off for the past month. So our algorithm has you at neutral. But your trend score has been increasing, which I think is starting to show an exhaustion of the selling to the downside. And we have you at medium support at $1.29 and medium to heavy resistance at $1.92. And your RSI is really oversold right now. So you're at almost a 31, and 30 is technically oversold. So, I mean, you look at some of these, have had a lot of massive candles for a company that's not that big and very tightly held. So I think that's kind of an interesting setup. So I just wanted to kind of get your thoughts. What do you think has gone on with the stock price in the past month or two?
Well, I'd say on the way up, I mean, I think we were benefiting from, certainly the momentum that the entire sector was seeing with the commodity price hitting new highs, a lot of money flowing into the sector. I mean, I'm a big believer in flow of funds, and I think that might explain some of what we're seeing directionally in a lot of areas. But on the way up, I do think a lot of it was there's been a lot of pent up interest, I'd say, in what we're doing, lack of confidence, perhaps, that the permitting was actually going to come to fruition. So when we got not just one but two real permitting milestones, the completion with the feds and then the draft with the state, it's sort of like, okay, maybe this momentum train is actually happening. So I think there's been some of that. And, and for me, I look a lot too to the volume. I mean, our volume used to be pretty paltry number of years ago, and it's picked up dramatically and on a consistent basis, which I feel offers also a more an easier environment for investors to get in, because they know they could also get out, which I know historically can be a problem with a lot of smaller cap companies, and we lived through that ourselves. So I think that was what was helping us on the way up. On the way down, I mean, I felt like we were participating on the down with everybody else. I mean, today maybe it was a little bit different, but I would note too that when I take kind of really far less detailed looks at screens than you do, but when I do look at kind of a 3-month time frame, I mean, we've really outperformed in that time. And I know that in these times of stress in markets, people cast around for, what is still up or what have I not lost money on when the margin call comes in. So I don't know if that's part of what's weighing on us right now. But, like I said, I think the fact that the volume has been better also shows there's a buyer on the other side of all those sales too.
Your volume has held up pretty well considering just the general liquidation of the gold sector. I mean, the past 2 weeks for gold has been absolutely brutal. And whether it's the biggest names from Newmont down to, the micro cap juniors, I think all of gold is just whatever bid it got on the way up. I think some of it was margin called on the way out because people were selling what they could, not what they wanted to.
Yeah.
So that's a great explanation. Thank you for doing that. And we're going to transition now into the Q&A. I'd like to bridge the technicals with the fundamentals that you talked about and dig a little deeper. So the first thing, Grassy Mountain, relatively low CapEx. I know you have, it's an older study with a new one coming out, but you have a pretty generous cash position built up. You're shovel ready. How are you looking to get this into production? Are you looking at traditional debt, royalty partner, joint venture? What's kind of your vision on how to get this into production?
I think at the end of the day, a lot of it's going to be driven by two main things. I think one is cost of capital, and the other is access to skilled people. And the thing is, over the years, obviously, there's been a real contraction in skilled individuals for all of the actual, mine development skills. And so I think this is one of the really important considerations as our project and many others move forward, is how do we actually deliver in a way that is going to generate the best return for our shareholders. And that's where I come also to a cost of capital conversation. Because yes, the capex at Grassy, even with the new study that comes out, is, it's not going to be $1 billion or anything like that. And so it's not that it wouldn't be financeable by Paramount. It certainly could be. It's really more a question of what is the best way to get to that result. And so, yes, on a high level, we'll be shovel ready when we get our permits. But in reality, there are a number of steps that still have to happen. Our final round of detailed engineering, and as you're suggesting, how do we finance the mine? And I think these are the times where we have already been having certainly strong focus at our board level and management level in understanding kind of the environment that we're in, and looking for the best possible outcome for our shareholders in that way. So, it's really about trying to stay nimble, trying to understand where our skills are, and trying to understand what are the different steps and layers that would need to be brought in on a successful execution of this project. Because, we're very firm believers that this project needs to be built. It needs to be built because it's a high return project, but more importantly, it needs to be built too because it's going to be a strong contributor to Malheur County. There are going to be so many positives that stem from having this mine built, and we can be a great corporate partner in whatever ultimate forum I see the project being envisioned. So there's a lot of good reasons to see this move forward, and we have a lot of strong support to see it move forward. So right now our job is to de-risk it as much as we can, and as we're figuring out what the best way is for that final step.
That's a great answer. And that kind of transition to my second question I was going to ask is, Oregon hasn't had a new gold mine in decades. So you guys have been a very, local first strategy. How has that helped you? Your permitting, how you've gotten this done has been a lot quicker than other areas. So could you, expand a little bit on that?
So, well, first thing is, this will be the first gold mine ever in the history, chemical
Okay.
processing mine in the history of Oregon, first ever. And, yes, we're calling it the first modern mine because there would have been, back in the gold rush days, there was some, I believe it would be artisanal mining and such that was happening. But the permitting laws that exist in Oregon today were developed in the early 90s, and nobody's been through it. And, so it's not that they've had a bunch of projects that they turned down, which is often the knee-jerk reaction when you tell people you're permitting in Oregon. They think about, the West Coast, they think about Portland and Antifa, and they're like, oh, these people are never going to permit a mine. But as you saw from those pictures, we're in a completely different part of the state. We're on the eastern border with Idaho, where, the sentiment is very different, and there's a lot of focus and interest in job creation. And so we have a commitment not just to hire locally, but we also want to get involved at the training level. So whether it's working with, there's community colleges there's interest from the high schools, there's so many different ways for us to get in. We'll have about an 18-month to 2-year construction period. So that too gives us lead time to start seeding some of these programs earlier in terms of generating the type of labor that we're going to need, specialized labor at the mine as well. So, some of it will come in quicker than others. Certainly when you have a very seasoned role like a mine manager, you'll probably need to source somebody from outside of the state. But we also know from past, open houses that we used to hold in Vail, Oregon, where we have a little office, that there are people who work all over Idaho and Nevada who drive every day from Oregon, and they're just waiting for us to open the project so they can come work for us instead. So hopefully none of them have retired by the time we get to it. But, there is really a lot of interest to see the jobs come into play. So that's really what's driving, I'd say, the broadest acceptance and interest throughout the state.
I think that would be great for that local community. That can be a real game changer for a lot of families, a lot of people who are looking to, who have that technical background, who haven't had that employment opportunity locally in a long time.
Yeah, absolutely.
And my last question is the Sleeper project in Nevada. That is really interesting to me. Does it make sense to try to develop both if you keep getting positive drill results back from Sleeper? I think that one has a lot of potential. So are you going to try to get the Oregon one into production first, and then you'll, kind of transition and pivot to Nevada? What's your strategy with that?
Well, that would be kind of a Hollywood problem, wouldn't it be? If we
Yeah.
could do both at the same time. I mean, I think, as it stands now, I think we just logistically continue on the de-risking with Grassy. Like I said, there are some big things that need to be determined prior to actually breaking ground. But there are also a lot of development steps that we can take, whether it's working out details for the power line. The road could see some early construction activity, landing on some, community positive efforts that we're looking at as part of our wildlife mitigation plan. Ways to help fund fire suppression, wildlife fire suppression, things like that. So there's things that we can continue to do at Grassy. And Sleeper, on the other side, it's very early from the standpoint that, again, we haven't really done much at Sleeper in the last number of years, with the exception of the continuous environmental permitting work that we do as part of the closure plan, because the asset's been closed. So that monitoring work is ongoing. That kind of environmental work is ongoing. And back in 2023, we produced what's called an initial assessment through SK 1300. So that's the the SEC's kind of version of 43101. And all that was at the time was this initial resource of the total resources there at Sleeper. So, dusting off new thinking on how can we look at this differently? Is there a different way to reimagine how this project could be brought forward into production is going to be an interesting opportunity for us to continue to follow through on. And I think that would probably happen prior to or in conjunction with some additional drilling. So remember, it's a huge land package. So then part of it is, are we looking for, really blue sky kind of exploration targets? Are we looking for ounces within the current resource that we either want to see increased or upgraded from a resource to kind of measured and indicated? So there's different ways to deploy that kind of drilling capital, let's say. And so I think a lot of it will depend on, where we are in our plans with Grassy, because again, a big focus for us over the last number of years was it's always permitting first. Like even through the dark days of, post COVID, it was all about how do we keep this company funded so we can continue on this permitting trajectory and deliver on what investors, our shareholders, have been waiting for the last 10 years.
Nice. So just to wrap this up, what do you think is the biggest fundamental driver for the company between now and, say, the end of the year? And where can our listeners find more information about you guys?
Yeah, I mean, we're kind of catalyst rich right now, but certainly I think additional visibility on permitting and timing, so that the market can start to understand how that plan comes to fruition, I think will be super helpful. I think our upcoming feasibility study too is going to provide at least a refreshed picture versus the older ones. I mean, the interesting dynamic, of course, is that we've seen this huge run up in the gold price and then correction in the gold price. And for a number of months, there's been complaints about, well, all these studies that come out, they have, 3,100, 3,200 as their price, but that's so much lower than spot. Well, maybe now this correction kind of reminds us why we have to use a more conservative number, because you don't want your report to be stale out of the gates, either because it's too aggressive. But so I think the fees on Grassy will really shed some good current economic perspective, and yes, and I'm excited for whatever plans we can put in motion to see some further development at Sleeper as well. So really, it's about the permitting, I'd say, first and foremost, but we're also trying to provide some additional sources of catalyst for our shareholders.
You guys definitely, I mean, I've been in the junior mining space for a while, and a lot of companies just have one thing that they're kind of hanging on, and you guys have a lot of versatility here. And I really like that as from a shareholder perspective. And you guys have proven you can get through, the initial permitting, and you've done a really good job getting to this point, and you have some really positive catalysts coming up. So I think it's definitely one my listeners should keep an eye out for. And thank you very much for joining us today. And that's it for us here. And if you're watching on YouTube, please hit the subscribe button so you don't miss our CEO deep dives. I'm Kevin Steuer. Thanks for joining us.
Thank you.